Bitcoin ETFs were a great success, and now people are looking to Ether ETFs to see if that same success can be duplicated. Hi, everyone. I'm Rosemary Miller here with Stephen Ehrlich, the director of Forbes Digital Assets, here to tell us more. Thank you so much for joining me today, Steve.
Hi, Rosemary.
So, Steve, how has Bitcoin's recent surge impacted the interest in Ether ETFs, and what challenges might issuers face in the light of this?
So at this point, I think the wild success of the spot Bitcoin ETFs that began trading on January 11th have really whet the appetite for more. And by wild success, I mean about $7.5 billion of new net demand has come into the market through these products. BlackRock's Bitcoin ETF has more than $10 billion in assets under management. I mean, these are massive numbers. So can this be duplicated? Well, the next sort of date on the calendar that people are looking to is May 23rd. That's the final deadline for the SEC to give a go or no-go decision on a spot Ether ETF application. And these will work the same way as the spot Bitcoin ones. Essentially, it would let anybody with an investment account get exposure to Ether without having to go through the hassle of signing up with an exchange and custodying it themselves and so on and so forth. So a lot of anticipation there. But there are a couple of additional complications surrounding these Ether ETF applications that are potentially putting some issuers or presenting them with some difficult questions. For one, as much of a struggle as there was to get the spot Bitcoin ETFs off the ground, and we've spoken about this in prior discussions. I mean, it was more than a 10-year fight to do that. A lot of it really focused on whether or not the SEC was comfortable with Bitcoin being a large market that's free from fraud and manipulation. And Ether will have to meet that same hurdle again. But one thing that Ether may need to contend with that Bitcoin did not is whether or not the SEC sees Ether as a security. That has some important implications because securities are regulated by the SEC. Commodities such as Bitcoin are not. And all of the spot Bitcoin ETF applications were filed under something called the 33 Act, which is really used for all commodity ETFs. And the Ether ETFs were filed under the same act as well. So the issuers, the same group of people, the likes of BlackRock, Fidelity, Invesco, Van Eck, ARC21 shares, they're all treating Ether as a commodity in how they have applied to launch those products. But the SEC has been very careful to not say one way or another if they see Ether as a security or a commodity. If they do, then these 33 Act applications would probably not be allowed to trade. So here's the real dilemma. Say the SEC feels that Ether is a security, that could incentivize some of these issuers to say, you know what, I want to get this off the ground. These spot Bitcoin ETFs were so successful. I want to get past the starting gate first. I will make the application. In the application, I will treat Ether as a security to perhaps ameliorate that concern from the SEC. But if they do that, that could be seen as almost traitorous in the crypto community, where decentralization, a core component of whether or not something is a security, is just foundational to the entire ideology.
So, Steve, how exactly does the origin story of Ethereum play a role in the SEC's consideration of Ether as a security?
This is an important point, and Ether's history is quite different than Bitcoin's. I mean, for instance, when Bitcoin, which was first sort of unveiled to the world in 2008, when the pseudonymous Satoshi Nakamoto released the Bitcoin white paper on Halloween night of that year, and then the new Bitcoin network actually went live in 2009. It was basically open source code that was set out into the wild, and anybody could have joined it and started mining tokens. I mean, the founder, Satoshi, whoever he, she, or they are, did not keep any tokens for himself or themselves in reserve. It was kind of seen as a fair launch. Everybody had an equal opportunity to get those initial Bitcoins. Ethereum was a little different because they sold these tokens in 2016 through what was known as an ICO, an initial coin offering, which the SEC has had numerous problems with. And in addition, they reserved a portion of the 72 million Ether tokens at launch for founding team members like Vitalik Buterin, who is seen as the founder of Ethereum. So there was already this kind of degree of centralized control might be too strong of a word, but just this like centralized actor that was sort of involved in developing and steering Ethereum, and because they sold these tokens and because they reserved some on their own, that added a degree of centralization, which is critical to determining whether or not something is a security. Over time, it has become more decentralized. At this point now, it's not even mining, it's proof of stake, and there's a wide variety of stakers and so on and so forth. But this origin story has been a problem. In fact, back in at the end of the prior decade, Bill Hinman, who was previously the SEC's director of corporate finance, gave a speech that was celebrated by the crypto community, where he basically said that Ether may have been a security when it launched, but now, in his opinion, it's sufficiently decentralized to the point of not being a security. But there's an important distinction to make here. One, he does not speak for the entire agency. That is not policy. I mean, that you would imagine those comments were vetted, but that doesn't mean that it speaks for the entire agency. And two, he did this under a prior administration. The SEC chair back then was Jay Clayton, who was appointed by former President Trump. Today we have Gary Gensler, who was appointed by President Biden, and Gensler has been very careful in public to not state whether or not he believes Ether is a security, although he has intimated in certain public comments that he does feel that Ether has certain qualities of a security.
Well, Steve, how does the involvement of major players like Coinbase in advocating for Ethereum as a commodity impact the SEC's decision-making process, and what role do industry ideals play in the industry's strategies?
So Coinbase is a really fascinating player in all of this because they play multiple roles in this story. I mean, for one, Coinbase is a key partner to most of the spot Bitcoin ETFs in the sense that they custody the assets that are behind the shares, and their prime brokerage services are often used to source those assets, and they'll be playing similar roles for these Ether products as well. So that's kind of important there. Two, Coinbase, along with Kraken and Binance, those are two other exchanges, and others, have been sued by the SEC, claiming that they're operating in contravention of U.S. securities laws by listing tokens that should be considered securities in the SEC's point of view. These are tokens like Solana and Cardano, but really interestingly, they did not name Ether. And that was kind of curious to myself and a lot of other observers, because that would be a great opportunity for the SEC to stake its claim that Ether is a security if that is how it felt. So that omission really kind of spoke a lot of volumes, but it talks about sort of the this stage of just not knowing where we are with it. So there's a lot going on there, but here's the real dilemma. Like, for instance, say a company like BlackRock, who partners with Coinbase on like Bitcoin brokerage services and other things, say they decide that, you know what, we're not like pure crypto idealists. We just want to get this out the door so we can replicate the $10 billion in AUM that we brought into these Bitcoin products. We'll file under the 40 Act, which is how traditional ETFs are filed, calling Ether a security, even if it's just to pacify the SEC. Well, what does that then mean for the SEC's case against Coinbase and other exchanges that they're currently suing? Because that would even though Ether was not mentioned in those suits, that can always be added, and that kind of would muddy the waters a little bit. So there's a lot there to consider. Plus, the other point too, just if one of these issuers decides to take the step, and to be clear, I actually spoke with two on the condition of anonymity, who said that they would be willing to change their registrations from 33 Act to 40 Act products. So this is not just me guessing or playing hypothetical. These are real statements that I had been told. That could also lead to some interesting questions for exchanges. I would imagine Coinbase and Kraken and others that strongly believe they do not list securities would not delist Ether, but others could, or it could also lead to decreased demand, at least in the U.S., which could also hamper the orderly functioning of Ether market. So there's really a lot going on here, and I think it really also just speaks to how the market is hurting because it does not have clear guidance, and Congress has not been able to pass laws to sort of make these important distinctions so that everybody knows the rule book.
Well, Steve, how would Ether ETFs impact investors?
I mean, in the same way that Bitcoin ones really do. It's as much or as easy as it has become to sign up for exchanges, crypto exchanges, or buy these assets during through Robinhood or PayPal. It's just an entire world once it gets access to the multi-trillion-dollar investment advisor community, and we're really just starting to scratch the surface of this when it comes to traditional RIAs and asset managers in the Bitcoin world. I mean, now we're seeing reports that Morgan Stanley and I believe Wells Fargo and others are starting to kick the tires on making these products available to their investors. And the same thing could happen down the line if Ether products do get the green light. That said, I think it's important to be cautious about not expecting the same type of momentous inflows into an Ether product that we saw with Bitcoin. I mean, for one, I mean, Bitcoin, I believe, especially in the eyes of investors, has a clearer value proposition and use case, a secure store of digital value with a pre-programmed monetary policy and so on and so forth. That's something. There are certain people that will just never believe in that and will feel that Bitcoin has zero intrinsic value because it's just a bunch of numbers and letters on a piece of paper or a computer screen. But for those believers or the people that just want to devote a little bit of that portfolio into this asset class, that's at least a value proposition that's easy to understand. Ether is a little bit different because that's seen as Ethereum is more of like a multi-purpose blockchain that's designed to power decentralized alternatives to social media sites and search engines and data storage. And so it's kind of seen a little bit more as a growth stock, a little bit more as just like, it's kind of seen a bit more in that vein. So it's a more apples to apples comparison, in my point of view, to the tech stocks that the Magnificent Seven that are just carrying the S&P 500 right now. So I think there might be some more interesting conversations to have for RIAs and asset managers to have with their clients to figure out how that really fits. But I think the broader story again is just that if this happens, it'll make it much easier for a wide variety of investors to get access to this product just by pushing a button or two.
Well, thank you so much for joining me today, Steve.
Great. Thanks, Rosemary.